Welcome to Daily Crypto, episode 47. We are diving headfirst into the dynamic, ever-evolving world of cryptocurrency. Things move so fast, don't they? It feels like the landscape shifts almost daily. It's a real challenge just keeping up, but that's why we're here, to try and cut through some of that noise for you. Okay, let's unpack this.
Indeed. And what's fascinating here is just how quickly things are changing. Not just, price action, market mood, but the actual tech underneath it all. And of course, the big regulatory debates happening everywhere. So our deep dive today, I think it'll uncover some pretty surprising trends. We'll look at the infrastructure that's shaping the digital economy and how the big institutional players are getting more involved.
Absolutely. So today we're taking you on a bit of a journey through these shifts. We'll kick things off with some, frankly, impressive scaling achievements over on Ethereum. Then we'll navigate into Bitcoin, its price movements, who's actually holding it these days. It's quite intriguing. And from there, we have to tackle the regulatory stuff, those crucial debates really shaping the industry's future. Plus, maybe touch on some unexpected market quirks too. So let's jump right into market momentum. Starting with Ethereum, they're making some really significant strides on scaling. You can see the network actively trying to handle more volume. Both TPS transactions per second and the gas limit are heading up. Actually, the gas limit, it's climbed over 37 million already. And what's really notable is that 47% of validators, they're already backing a push to 45 million. That's nearly half. Plus, there's the upcoming Fusaka upgrade that's set for November. Its next DevNet is going live soon, and the first public testnet, I think that's late September. So if you're listening, what do these technical upgrades actually mean for using Ethereum day to day?
That's the critical question, isn't it? When you connect this to the bigger picture, these scaling efforts are, well, they're fundamental. For network efficiency, for user experience, a higher gas limit means, simply put, more transactions fit into each block. And that means, hopefully, lower fees and less waiting around when the network gets busy. It's not just about boosting raw numbers, though. It's about making Ethereum viable for, truly global applications. Stuff that could onboard billions of users, maybe even compete directly with traditional web services on speed and cost. That's the real potential game changer here, pushing Ethereum towards, proper mainstream adoption.
And speaking of significant movements, maybe we should turn to Bitcoin. Despite the usual ups and downs, it's definitely shown some strong bullish signs recently.
It really has.
Yeah.
And some traders are getting pretty ambitious. We're hearing talk of a $125,000 price target. They seem to be anticipating what they call a big move. And there's data to back up that positive outlook, right? The spot Bitcoin ETFs, they've seen these massive inflows, gained $363 million just recently, and that extended a 12-day inflow streak to a total of $6.6 billion. That is a lot of capital coming in.
It really is. And this surge in institutional money, well, this raises an important question. What's the main risk or maybe benefit of having these huge capital movements from institutions, especially thinking about market stability overall? We're also seeing big players like Strategy just keep stacking sats, basically. Their total Bitcoin stash is now worth over $71 billion. So this kind of institutional buying, plus the total crypto market cap breaking $4 trillion. It does paint a picture of growing confidence, but it also concentrates ownership more, which is definitely something to keep an eye on.
Yeah, that concentration of ownership is definitely food for thought. But it's not all sunshine and roses, of course. We need balance. Robert Kiyosaki, the rich dad, poor dad guy, he's put out warnings, saying Bitcoin could be a bubble poised to burst soon, along with other assets. So definitely not everyone's convinced it's straight up from here. But then on the flip side, you see some pretty wild altcoin predictions too. Some analysts suggesting XLM could shoot up like XRP did, and other charts hinting XRP itself might hit $20, suggesting the full bull phase hasn't even really started yet.
Certainly a mixed bag out there. Lots of contrasting signals, different takes on the same data. That's crypto for you.
It really is. And here's a little nugget from Santiment, the analytics firm. Apparently, Bitcoin's 43% dominance in social chat volume might suggest a key entry point is coming up. Sort of implies that even with all the noise, there might be an undervalued moment for people watching closely. Interesting thought. Okay, let's shift gears. Let's talk regulation. Always a big one, always moving fast. Let's dive into this genius bill. It's emerged as a really significant piece of legislation. Contentious too. And here's where it gets really interesting. You've got two totally different takes on it. On one side, you have a U.S. lawmaker basically sounding the alarm, calling it a CBDC Trojan horse. The implication being it sneaks in a central bank digital currency without, proper debate.
Right, that's one perspective, a pretty strong warning. But then you have Dante Disparte, an exec at Circle. They issue USDC, a major stablecoin, and he has a completely different interpretation. He argues the Genius Act actually prevents big tech and big banks from just dominating stablecoins without strict rules. So from his view, it's about leveling the playing field, stopping monopolies, encouraging innovation. These opposing views really highlight that core tension in crypto rules, don't they? How do you balance innovation, decentralization with the traditional finance world's demands for stability, consumer protection? The outcome here really could define who controls digital assets in the future, centralized players or decentralized protocols. And we're also seeing the U.S. bank lobby pushing back hard against crypto firms trying to get bank licenses. They're citing significant policy and process concerns, basically trying to slow down that integration, you could say.
Yeah, those wildly different takes on the Genius bill.
Mm.
They really make you wonder, don't they? Which way are we actually heading?
Yeah.
And how does all this uncertainty affect confidence in digital currencies? And it's not just the U.S. There was that report, maybe you saw it, about the U.K., apparently working to sell off seized Bitcoin, up to $7 billion worth, to boost the budget. Imagine. Although there's a counter-argument, too, suggesting maybe that report was just, sensationalism because the market's hot. Hard to know for sure, but it definitely shows governments are starting to seize crypto as a real asset.
Exactly. It speaks volumes about crypto becoming a recognized, significant financial asset, even at the state level, for better or worse. And look, another sign of integration. The crypto exchange, bullish. They filed for a U.S. IPO. They're aiming for an NYSE listing, ticker BLSH. That's a pretty big step, right? A crypto-native company going public on a major exchange opens it up to way more investors.
It really is a milestone. And you hear experts saying that Crypto Week brought big changes, calling the Genius Act maybe a starting point for real integration with finance, even identity systems. So yeah, lots of debate, but also this powerful sense that things are moving towards a more connected financial future. All right, let's unpack some other stuff happening, maybe more niche, but still fascinating. Tech developments, unexpected trends. First up, let's look at ecosystems maturing and the growing pains that come with that. We've seen this blistering NFT sweep happening. Collections like CryptoPunks, Penguins, they're surging again, suggests maybe renewed interest, people looking for those blue chip digital assets, maybe some stability within the NFT market itself.
It is a noticeable shift. Especially because, remember Yehuda Petra from CryptoSlam, the strategist? He predicted a market rebound back in May, though he did say it'd be more tempered. So it looks like that rebound is happening. Maybe not a total frenzy, but definitely activity. But growth isn't without its dark side, is it? That statistic from Elliptic, the blockchain analytics guys, it's pretty alarming. They said cross-chain swaps, moving assets between different blockchains have been used to move $21 billion in illicit funds. That's a 200% increase in just 2 years. 200%. It just highlights that constant battle against criminals and the absolute need for better security as these networks get more connected.
Wow, 200%. Yeah, that's a sobering number. Really underscores the need for constant vigilance, better security tools. And speaking of technical hurdles as things grow, MetaMask. Some users have been reporting this unusually high disk activity. The worry is it's slowly killing solid-state drives, which is, not great. Thankfully, Consensus, the company behind MetaMask, they say a fix is coming very soon. But it's a good example of a real-world user problem that pops up, highlighting why technical stability is so crucial, even for popular tools.
Absolutely. That MetaMask issue, while worrying for users, it just reinforces the point again. You need robust security, technical stability, especially as the space expands. But let's look beyond just finance for a second. It's pretty exciting to see how AI and blockchain are starting to disrupt things like legacy education, offering more accessible options for students. So it's not just about money, right? It's about potential broader societal changes, new ways to share knowledge.
That's a really powerful point. And it connects to that bigger conversation, doesn't it? About the philosophy behind crypto. You hear a lot of people arguing that embedding human rights into the tech isn't just nice to have, it's foundational. Things like self-custody, holding your own keys, privacy by default, censorship-resistant personhood, basically ensuring people can interact online without being arbitrarily shut out or controlled. These should be core design principles. It's really about trying to build a more equitable and free digital future.
Yeah, that focus on human rights as a core principle is vital as the tech matures. It elevates the whole conversation beyond just speculation, doesn't it, to the actual purpose and impact of these systems. And speaking of foundational work, Charles Hoskinson from Cardano, he gave an update recently, said an important audit report for Cardano is shipping up for release in August. That'll be a big deal for their ecosystem.
Definitely one to watch. And then, on the totally other end of the spectrum, the high leverage traders making these absolutely massive bets that show just how dynamic this market is. James Wynn, for instance, he apparently opened a 25x long on ETH and a 10x long on PPE, worth over $23 million combined, after depositing just over $500,000 in USDC. It just shows the kind of incredible leverage and risk people are taking chasing those big games. So what does this all mean? Wrapping up our deep dive here, we've covered a lot of ground today. From those exciting tech advances pushing Ethereum forward to the really crucial regulatory debates around things like the Genius Act and all the different behaviors we're seeing in the market, NFTs making a comeback, high stakes trading. For you, the listener, I guess it just means staying informed is key, isn't it? In a landscape that's evolving so fast, constantly pushing boundaries.
Indeed. Understanding how these things connect the tech, the regulation, the market reactions, that's really key to navigating what's next for digital assets. We talked quite a bit about Bitcoin's price, who's buying it, but let's end with maybe a provocative thought. Who really owns Bitcoin in, say, 2025? Think about that rich list. You've got the big exchanges holding huge amounts, the Bitcoin ETFs now, potentially sovereign wealth funds getting involved, crypto billionaires. The ownership map shows this really interesting mix. Concentration in some powerful hands, definitely, but also this kind of quiet decentralization, more individuals holding smaller amounts. So what does that changing distribution of ownership mean for Bitcoin's future, its role in the global financial system? Think about that balance of power as this asset keeps maturing and weaving itself into our world.
That is a fantastic question to leave everyone with, something that could really reshape how we see the financial landscape down the road. Thank you so much for joining us on this deep dive today. Keep exploring, keep asking questions, and definitely stay informed.